Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market that from a monthly standpoint is currently trapped in this monthly range. We have the top of the range here currently acting as resistance, and the market has already respected it as resistance in multiple occasions. And at the same time, we have the bottom of the range here currently acting as support, which as well, the market has respected in multiple occasions. Now, the next logical step since the last test of the boundaries of this range was of the top of the range, the next logical step would be for the market to go and test the low of this range. So from a monthly standpoint, everything seems quite bearish, and there is a possibility of seeing more bearish price action for the market to go and test what kind of liquidity we have here at the bottom of this range. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. We have a market which created a massive impulse to the downside, then followed with a correction. And after the correction, the market is currently following with a continuation to the downside, essentially creating an impulse correction and impulse pattern to the downside. So from a weekly standpoint, the market does seem quite bearish, and there is a possibility to see a bit more bearish price action being created with the possibility of going and testing the bottom of this monthly range. We can also notice that we have an impulse and correction, and in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And what this shows us is that the market has retraced exactly to the 0.32 of the Fibonacci taken on the impulse leg, which is the first retracement level to which you expect the market to create a correction to in the case of a strong trend before then continuing lower, which is in fact exactly what the market did. And we can also notice that actually the level that the market is currently rejecting is not only the 0.32 Fibonacci, but is actually a confluence of resistance, because we have both the Fibonacci level and the previous support and resistance both lining up in the same area of price, and that creates confluence of resistance. And inside of a confluence of resistance zone, you have an increased probability of seeing institutional shorting, which at that point further increases the probabilities of a correction, and in this case, continuation to the downside and rejection away from the level. But we will be speaking about institutional shorting in just a few minutes. For now, let's drop down on the daily time frame and keep all of this in mind. Now, here on the daily, we can see that the market is currently pushing to the downside quite aggressively. I did speak about USDCAD just a few days ago when the market was around this area, and I explained all the reasons for which we could expect first the break, then the retest of the level, and then the continuation to the downside, which is in fact exactly what the market just did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But at the moment, what kind of structure we have? Well, before we dig more into detail here on what we have from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing precisely on the CAD. Now, the first thing to keep in mind is that if we're looking at the data for the CAD, we're actually already looking at CAD USD, because all currencies on the spot are traded against the USD. So if we see here that net positions have been increased, so institutions are moving back to the bullish side for CAD USD, so increasing their net positions from minus 196K all the way up to minus 73.1K, this essentially means that actually institutions are moving to the bearish side for USDCAD, because if they are longing the CAD, in order to long the CAD, they are essentially shorting USDCAD. And we can see, in fact, how just with the last report, they added 1.8K shorts on the CAD and closed the longs, which means that in the short term, USDCAD, fueled by this short-term weakness of the CAD, could be a bit stronger, but in the long run, it is clear that they have been increasing their net positions quite aggressively. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description. Now, back to the analysis. So from a daily perspective, as we were saying, institutions seem to be short-term bullish and long-term bearish on USDCAD, which gives the possibility for the market to create a potential deeper correction before then continuing lower to go and test the low of the range, fueled by the institutional shorting. If we check the structure, we can notice how we do have previous daily support, which is now turned resistance around this level. So if the market will now go and correct into this zone, there is a possibility inside of here to see more institutional shorting, which at that point could further increase the probabilities of that potential rejection to the downside away from the level. So if the market will go and correct to this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, at that point, I wouldn't be surprised to see a potential rejection to the downside, completing this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below and I will see you in my next video.